Stocks correct on Wall Street as Treasury yields surge ahead of Fed Chairman Jerome Powell's address at the Jackson Hole Symposium later today. Tech shares lead losses with the Nasdaq correcting over 1.5%. Stocks in the Asia-Pacific trade largely lower following weak cues from Wall Street. The GIFT Nifty is also suggesting a weak start for the Indian market. Brent crude rises marginally to trade around $77 a barrel as the dollar strengthens. Gold prices continue to trade about $2,500 an ounce. Minutes of the Monetary Policy Committee meet show divisions within the panel. Governor Das and RBI members remain firm on the 4% inflation target. 0.84% stake in a block deal worth 4,198 crore rupees. A block deal is also likely in Nikkei, where pre-IPO investor Harinder Pal Singh Banga is likely to sell 1.4% stake in the company. A very good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Friday. We are towards the end of this trading week. A lot that has happened. It went by quickly as well. But yes, a lot to catch up on as well. So first up, let's take a look at what the Asian markets are doing. Now, it was a down day for the US markets because of high Treasury yields. That is something which we can see in the Asian markets as well right now. The Taiwanese index, it's down 140 points. We have the Hang Seng sitting with cuts of 100 points. And mostly across the board, it's the red-looking Asian screen that we are talking about. Kospi is down 0.5%. We have Nikkei, which is sitting with cuts of around 0.3%. So it is the impact of US markets that we're seeing on the Asian screen as well. The GIFT Nifty, that'll come up for you on the screen because that one is indicating absolutely flatter start. It could be in the green, but yes, it's largely a flat move that the implied open is suggesting right now, up around 3 odd points. Let's talk about the US markets because Wall Street ended Thursday's trading session lower in anticipation of the Fed Chair Jerome Powell's speech later today. The Dow lost 180 points while the S&P shed 50 points. The tech-heavy index, the Nasdaq, was the worst performer, shedding 300 points. The US 10-year Treasury yields also climbed nearly 9 basis points as investors looked ahead to the Fed Chair's comments. And let's stay with Wall Street ahead of Fed Chair's speech. Philadelphia Fed President Patrick Harker shared his opinions on the speculation surrounding Fed rate cuts and softening of the labor market. Listen in.
Well, I think it means this September we need to start a process of moving rates down. The one thing I heard from them, bankers, business leaders, community leaders, is whatever you do, do it methodically and signal it well in advance. Give us time to absorb the change. I mean, they understood why we did what we did to bring rates up very quickly, but they're saying, please don't do that again to us. Now, barring something we don't anticipate in terms of the data, right, we need to start bringing them down methodically. What they say to me is, we don't really care that much whether it's 25 or 50. It's just start the process and keep it moving.
Okay, and Jeremy Siegel from Wharton School at University of Pennsylvania shares his position on how aggressive Federal Reserve needs to be with its rate cuts with respect to inflation and labor market. Additionally, former chief economist at IMF, Kenneth Rogoff, comments Federal Reserve should move deliberately and methodically to cut rates.
This is my position. If you look at the last dot plot from the June meeting, the Fed says that if we are balanced risks, we should be at 2.8% Fed funds. Now, and I ask you, looking forward next 6 months, what do you think is more likely? That we're going to have a flare-up of inflation or that the employment picture is going to weaken? Now, I actually think the latter. As you know, the Fed has stated its long-term unemployment goal. It's 4.2. Well, the last meeting, we hit 4.3. So they've already loosened the labor market to their ideal position.
I mean, I think what they need to do is move deliberately and methodically unless the data is really bad. I mean, the fact is that what matters the most for the economy are the longer term interest rates, and you set the direction for where you're going with the short term rate, and it has pretty much the same effect. So sure, there are traders who make money or lose money, depending on if it's 25 or 50. But unless there's something dramatic, I bet they do 25, but signal they're going to keep doing that for a while.
Okay, all right. It's time to get to the final update on our global market wrap this morning. Stocks in Europe closed mixed as investors digest the Fed minutes that point to a rate cut in September. The French CAC closed flat while the German DAX gained 44 points. The British FTSE also closed near the flat line, gaining 4 points. The Pan-European Stock 600 index, it also ended 0.35% higher, with major bosses and most sectors in the green. Meanwhile, minutes from the ECB meeting released yesterday show that policymakers were in no rush to cut rates in July, but that they saw September as the next best opportunity to consider a further easing. And that's the global market action and opinion. But let's talk about how all of this will impact our own markets. We have our research team joining in to tell you just that. They're happier today since it's a Friday. So, guys, a very good morning to all of you. And may it be a very happy Friday for all of us. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. Absolutely, it's Friday. Now what's actually transpired is that today we will be seeing a very important event where, like you've been mentioning since the start of the show, that speech from the Fed chair is something that the entire street is looking forward to. Ahead of that, yesterday, US market sold off a little bit, so they're going in quite lighter compared to what they were, around 10 sessions ago. Now, talking about how oil prices panned out. Oil prices yesterday ended with minor gains. Brent ended up almost 1.5% higher, closer to the $78 a barrel mark. But now coming to the Indian markets. Indian markets yesterday ended with minor gains, largely, range-bound trading session. What did well? The bank nifty did very well. Not only did the banks, the entire banking bank, and also the NBFCs, they also did well, and they ended amongst the top gainers in the broader markets as well. Apart from that, a couple of sectors yesterday that started seeing some up move was the cement as well as the fertilizer pack. So they were also something that saw quite a bit of an up move. Advance decline ratio yesterday was very strong at 2:1. So the broader end of the markets continue to see positive momentum. What is it that we're watching out for today? Well, you are seeing a whole host of block deals that happened in trade yesterday. That looks all set to continue today as well. Block deals, fundraising, QIPs. This is on the radar. Asian markets, GIFT Nifty, all of them indicating a flat to slightly subdued start for our own markets today.
Okay, all right. Thank you so much for that, Vivek. Let's talk about all the stocks which will be on our radar today. Hormaz has that list for us. Good morning, Hormaz.
Morning, Sonal. And if it's not earnings, it's block deals, and they are going to continue today as well. After almost 7 or 8 that we saw yesterday, 2 more are lined up today. Ambuja Cements is the first one, where the promoter Holder in Investments is looking to sell around 2.8% stake. Deals are valued at around 4,000 crore rupees. The price of the deal around 600 rupees, which is a 5% discount to yesterday's closing price. The other one, though, is lined up in Nykaa, where Harinder Pal Singh and associates are likely to sell up to a 1.4% stake. The floor price of 198 is around a 5 to 6% discount here as well. And the Harinder Pal Singh, as of the 30th of June, held around 6.4% stake in the company. Now, Adani Power will also be in focus because the NCLT has approved its resolution plan to acquire Lanco Amarkantak Power, and that is for around 4,000 crore rupees. This is just another step towards this because the Committee of Creditors had approved this in March. And so this is the NCLT approval that has come in. Now, Jain Irrigation, they have signed an MOU with the Indian Coffee Board, and this is for a commercial release of advanced, high quality and disease-resistant coffee plants that they have signed the deal for. Bharti Airtel will be in focus because the GST demand notice that was given to them, that has been cut down from 600 crores to just under 200 crore rupees now. Polymedicure, they've closed their QIP. They raised 1,000 crores through it. 7 funds were issued, a significant amount of shares, prominent among them being Lighthouse India, SBI MF, Nomura, and of course Quant Mutual Fund as well. Bikaji Foods board meet is today to consider approve the stake purchase that they are planning in Ariba Foods. And Yes Bank is also meeting today to consider funds via debt securities. And on the IPO front, we have Orient Technologies is the final day today. And for the last 2 days, the issue has been subscribed around 17 times. Back to you.
Okay, all right. Earnings, no earnings. The stock is always, the list is always long when it's stocks and news. But let me go across to Mangalam now. He's joining in with all the cues from the FNO space. Good morning.
Good morning. So, it's a very interesting phase of the market right now. Whatever happens, we're consolidating on the way up. This week has been a very strong one for the mid-cap end of things as well. And the Nifty Bank and the IT index keep taking turns to support the frontline index. Yesterday, 24,811, right in the middle of that range for expiry that we were expecting is where the Nifty ended. But the Nifty Bank was the one that really stood out in yesterday's trading session. Why is that? Because it conquered the 20-day moving average and now is just about 500 points away from the 50-day moving average as well. Where does it go from here will be extremely crucial. The other part will be the IT index. That was weak in yesterday's trading session, and that will be in focus ahead of Fed Chair Jerome Powell's speech at Jackson Hole today. Remember, typically ahead of these meetings, the market takes long positions into the Fed event itself. So does the IT pack return today or not is something that we'll be tracking very, very closely. In terms of an up move yesterday from cash markets, yes, there were net institutional flows, of course, some of them impacted by a couple of large trades as well, but a purchase from both the FIs and the DIIs is what we saw. Interesting space in the index futures as well. The FIs bought 600 crores worth index futures, but they sold 425 crores worth Nifty futures, and they actually bought Nifty bank futures. So can the up move on the Nifty bank sustain or not is something that we will track. And on the Nifty itself, they are in index futures, they're 52% long. If you look at the Nifty options, 24,800 call is very active. The premium is 160 rupees. If the Nifty crosses past that hurdle of 24,950 to 25,000, then there is a large breakout which is available, and that's reflective in the kind of call writing that we've seen or call buying that we've seen at 25,500 itself for a premium of just 4 rupees. So what is it that the option writers are expecting given the call and put action? They're expecting support around 24,650 to 24,700. But if the Nifty holds above that congestion zone, then there is a big breakout that the street is positioned for. In terms of stocks, watching out for Chambal Fertilizers, IEX and RBL Bank. They've entered F&O ban. And out of ban is Balrampur Chini. So keep an eye out on that one.
Okay, all right. So that's the market setup looking like today. Thank you so much for guys for joining us and telling us what to expect from trading day today. We'll slip into a break now. When we come back, we'll get to the highlights from the minutes of RBI's Monetary Policy Committee meeting. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, the minutes of the RBI's Monetary Policy Committee meeting of August 8 were disclosed yesterday, and the key takeaway is the deep division in the MPC about how strong growth is and how bad is food inflation. Lata Venkatesh is joining us with her take on the same. Lata.
Well, the minutes clearly show a very deep division in the MPC, with 1/3 of the members clearly believing there was a rate cut space, and the majority, 2/3, not agreeing. But we must remember that we were already aware of this. The voting was known. The two members who disagreed, Dr. Verma and Dr. Ashima Goyal, spoke to CNBC TV 18. And the minutes also indicate that they believe India's potential growth is actually much stronger. It should be 8% plus. And by keeping the interest rates as high as 6.5%, the RBI is restricting, or the MPC is restricting the economy from achieving that growth. What they would target is the real rate, that is 6.5% repo rate minus the actual inflation. The year-ahead inflation, according to RBI, is 4.4. So Verma says 2.1% difference, the real rate, is too high. 1.5% is enough, and that will help India achieve. The important point that both of them make, and more Verma strongly, is that actually the Indian economy is slowing. The corporate results of the first quarter saw more downgrades of earnings. The profits came in lower than expected, and they're also pointing to the fact that core inflation is only at 3%, which means there is not enough demand in the economy. So they're very strongly arguing something which the other four members are not buying, and that's more important because the three RBI members and one external member, Dr. Bide, including the governor actually, strongly believe that growth is good. And when growth is good, it gives the MPC the space, the elbow room, to chase down inflation all the way to 4%. And the fact that food inflation is very high, persistently, and very important ones, as Patra points out, pulses, cereals, etc., indicates that there can be a spillover into a generalized inflation, and therefore the MPC should not leave out its vigil. The important point to note is that this is the last MPC meeting for the three external members, Verma, Goyal and Bide. Their 4-year term ends, and in October we will have a fresh set of three external members. If the governor's term indeed ends in December, then there will be a fourth new member, and if Deputy Governor Patra's term ends in Jan, as it is supposed to, they all can get extensions, governor and deputy governor. But going by the current term, 5 members will be new by the time we come to the February policy.
Okay, all right. On that note also, let's listen in to what the external members had to say.
A very high real rate makes capex unattractive to the corporate. And if demand is inadequate, that also does that. And restrictive monetary policy is one of the things driving demand as well. If we think that demand is deficient, that the economy requires very large fiscal support because private demand, the private consumption expenditure is not growing, then we have to ask, what have you done? Is monetary policy part of the problem?
The budget deficit is conservative. It's on the fiscal consolidation part. So the excess demand stimulus from government is going down. And so there's space for monetary policy to support demand more. And we're not using that space. So we are restraining growth.
It's not the supply side alone. I think that is important, looking at the growth rate. In that context, 7% growth rate appears to be fairly strong growth at this point. So I think, if we need to raise the 7% growth to 8%, I don't think the present demand conditions support that. Inflation on the major components of the basket of consumption is moderate.
Okay, some important comments coming in there, but for now we'll sip into a break. When we come back, we'll talk all about the cues from the commodities market, so stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC TV 18. It's time to talk about commodity markets. Manisha Gupta is joining us with all the updates. Good morning, Manisha. Happy Friday to you.
Oh, to you as well, Sonal. And we are looking at some profit taking in many commodities. Remember, we started this week on a positive note, but that's not how we seem to be ending it. And understandably so, because you have the Jackson Hole meeting today, and markets would want to listen to what the Fed Chair Jerome Powell has to say, and that would really set course on how this week ends and how the next week begins. So ahead of that, we have seen the strength in US dollar, and that is weighing on many of these commodities. So the gold prices have come off, fell 1% overnight. Silver fell 2% overnight. It's trading off its 2-month highs that we saw trading it earlier. Some bit of a strength, though, has come back in case of the crude oil prices. That gained 1.5% in the overnight markets. Prices now are off its January lows. There also is a decline in U.S. crude inventories that seems to be supporting the markets as well. A very strong gain is what we are also looking at in sense of coal prices. Those are trading at an 8-month highs. Markets also have seen some stability come back in case of base metal prices. No further gains, but many of these metals are holding on the higher side of the range in Asia right now.
Okay, all right. So that's what's happening with the commodity space. Let's move on to some international news updates now. Prime Minister Narendra Modi is set to visit Kyiv today for talks with Ukrainian President Volodymyr Zelensky. PM Modi met Poland's Prime Minister Donald Tusk in Warsaw during the first leg of his two-nation visit. PM Modi voiced his deep concern over the ongoing war between Russia and Ukraine and the conflict in West Asia. He also met with Polish President on Thursday on the last day of his visit to Warsaw. And the trip follows his July visit to Moscow, which drew criticism from the US and the Ukrainian president. Moving on, after the World Health Organization declared monkeypox as a public health emergency of international concern, the Union Health Ministry has issued directives to prevent the spread of the virus in India. The guidelines include the establishment of testing laboratories and health facilities dedicated to the screening and managing of monkeypox cases. The BMC, as a precautionary measure, has reserved a 14-bed ward in Mumbai's Seven Hills Hospital. The Airport Health Organization has already started screening passengers from monkeypox-affected countries. A health information desk has also been set up at the airport. Okay, with that, it's curtains down on Power Breakfast today. But stay tuned. Bazaar Morning Call comes up next with all the market action. Stay tuned.